This is Nightly Business Report with Tyler Matheson and Sue Herrera.
Goldman's Golden Report. What fueled the company's best quarterly results in years? Market debut. IPOs are back, but there are three things investors need to know before buying into them. Industry aftershocks. Why Oklahoma finds itself at the epicenter of a debate over fracking and earthquakes. All that and more tonight on Nightly Business Report for Thursday, April 16th. Good evening, everyone, and welcome. I'm Sue Herrera. Tyler Matheson, my partner, is off tonight. It was all green for some of America's bluest blue-chip companies, delivering better than expected earnings. And in the case of Goldman Sachs, the numbers were blowout, smashing through analyst estimates, echoing the strong results earlier this week by other big banks. In Goldman's case, a strong performance by its trading arm fueled its best quarterly numbers in years, confirming management's strategy of maintaining a business model critics said was too risky in the wake of the financial crisis. Investors, however, were expecting those strong numbers, and after a recent run-up in the stock, they sold shares, sending the stock slightly lower. Mary Thompson reports.
While still below the record results put up in the midst of the financial crisis, Goldman Sachs' first quarter numbers packed a punch.
I actually thought that the results were quite impressive.
The New York-based bank posting its highest quarterly revenue in 4 years, its highest quarterly profit in 5. Thanks to strong performances in its trading businesses, which generated half of the bank's more than $10 billion in revenue. On a call, CFO Harvey Schwartz said expectations for higher rates in the U.S. and lower rates in Europe spurred clients to take action.
The prospect of two of the world's largest economies implementing divergent monetary policies had a significant impact.
All of Goldman's businesses, investment banking, asset management, and the firm's investment and lending portfolio contributed to the more than $2.8 billion Goldman earned in the first quarter, as the bank held the line on pay and benefited from a lower tax rate. The result, an industry-leading measure of profitability known as ROE. It almost hit 15%, prompting praise from analyst Stephen Chubak, who rates Goldman a neutral.
I thought it was a higher quality beat than we've seen from Goldman this go around versus more recent quarters.
Now, many saw this quarter as vindicating management's decision after the financial crisis to basically stick to its knitting. Unlike other rivals, Goldman didn't abandon riskier core trading business and bulk up on steadier businesses like asset management, something some critics believe they had to do. However, as Chubak told CNBC, one quarter does not make a trend, and Goldman's earnings, while strong in the first quarter, could still be volatile because of those businesses.
Absolutely. Stay right there, Mary, because we also want to talk to you about American Express results, which were out right after the closing bell. So the world's largest credit card issuer reported a 6% rise in profit to $1.48 a share. That beat estimates. Revenues, however, were a little light at $7.95 billion, a nearly 3% decline from a year ago. The reaction in the stock was pretty choppy. So as you can see from the chart, we did see some gains, but the volatility was there. So, Mary, what did you make of the quarter? What was, you know this company so well. What was the one big takeaway that you had?
Well, the company continues to be helped by its expense management. That helped in the first quarter, along with fairly strong spending by its customers. But it faces a number of headwinds in the year ahead: the continuation of the strong dollar, weaker gas prices, and, of course, the expiration of that exclusive deal it has with U.S. Costco.
Right.
The company has to invest in new growth initiatives going forward. So it may have a little less leverage on the expense side, meaning that I think investors will have to, or have less to look forward to this quarter or this year. The company did say earnings would be flat to lower as expected. But again, it's leverage. The tools that it's used to boost those earnings in the past may not be quite as available as it invests in those growth businesses.
Mary, thank you. As always, appreciate it. Mary Thompson. And sticking with the financials, Citi reported its highest quarterly profit in nearly 8 years as its costs fell. The bank has been cutting costs to simplify its structure and selling off non-core businesses. One analyst calls Citi, quote, the big turnaround story for the large cap banks, end quote, and shares rose 1.5%. On Wall Street, stocks attempted to rally, but they stalled out despite the positive earnings news and a number of initial public offerings hitting the market. We'll have more on that in just a moment. At the close, the Dow Jones Industrial Average fell nearly 7 points to 18,105. The Nasdaq gave back 3, and the S&P 500 dropped about 1 point. The nation's largest health insurer, United Health, also reported better than expected first quarter results, and the Dow component raised its full year guidance. That made the stock the top performer on the Dow today, with a gain of more than 3.5%. Bertha Coombs has more on what's driving this healthcare bellwether.
United Health Group expected to see higher medical costs this winter after adding over 500,000 new public health exchange customers, with people using more services and big demand for expensive hepatitis C drugs. Instead, United's overall medical costs fell.
And they've got well-controlled hospital costs, particularly on the inpatient side. They're seeing some relief from the hepatitis C pressures that they saw last year.
United raised its earnings outlook, confident its $12.8 billion acquisition of pharmacy benefits firm Catamaran will be a strong boost to its fast-growing health IT unit. The insurer says it can continue to manage costs, even as Americans have more access to medical care and hospitals are reporting stronger patient volumes. Leerink analyst Anna Gupta says the Affordable Care Act is benefiting the industry as a whole.
I'm a firm believer in the Goldilocks investment thesis. I think that the environment is just right for both payers and providers. On the payer side, they're not seeing any uptick in utilization. On the provider side, they're seeing the benefit of the tailwinds from the Affordable Care Act.
Analysts say United's diverse healthcare businesses position the insurer well if medical costs rise. Its large scale makes it a force in healthcare and helps set the tone in an industry that's focused on managing costs.
But this is the start of a really encouraging transformation, and an industry that, through a variety of carrots and sticks that have been brought to bear, an industry that is performing more efficiently.
One potential setback for United and the insurance industry is the case now before the Supreme Court involving subsidies on the federal exchange. A ruling overturning those subsidies is likely to weigh heavily on the sector. Bertha Coombs, Nightly Business Report, New York.
CEO of the world's biggest drug companies met in Washington, D.C. for the industry's annual board meeting. One big topic of discussion, deal making, and Merck's chief said he's on the hunt for an acquisition.
We want to do deals and for one of two reasons. Either because we want to get the next wave of science, or we want to build on areas where we have a leadership role right now, like diabetes, like vaccines, like infectious diseases, like cancer. So you will see us do bolt-on acquisitions aimed at those spaces where we're either leading or where we aspire to lead going forward. We're not interested in the very large consolidation type deals.
The CEO of rival drug maker Pfizer also said he's interested in expansion. Investors were paying attention to all the Fed speak out there today as the market looks for clues as to when and by how much the central bank may hike rates. Atlanta Fed President Dennis Lockhart said he favors a rate hike later in the year rather than in June. Boston Fed President Eric Rosengren said that the criteria for rate hikes have not yet been met. And Cleveland Fed President Loretta Mester says that any rate hikes should follow a gradual path. And then there's the vice chair of the central bank, Stanley Fischer, who told Sarah Eisen that he's watching the economy closely.
Where most people think it'll happen this year, but you don't want to get a lot more definite than that. It depends on how the economy develops. We'll try and do it at the best possible time, and we'd like to see the economy beginning to grow again and grow at a decent rate.
Fischer also said an economic rebound is underway following the weak first quarter. OPEC, the Organization of Petroleum Exporting Countries, reporting a sudden surge in March oil production. That extra supply, being added to an already oversaturated market, weighed on the commodity early in the session, but then unrest in Yemen prompted prices to reverse course. And by settlement, West Texas Intermediate closed at another high for the year at $56.71, its sixth straight session higher. Oil and gas production has quickly become Oklahoma's largest industry, but now some scientists are questioning whether the increase in earthquake activity is related to part of the fracking process. Morgan Brennan reports from Prague, Oklahoma.
Struck Prague, Oklahoma in 2011 was the largest in state history.
Everything just started shaking.
So it was really scary.
And though highly debated, many point to the energy industry as the culprit. That's because as oil and gas production has doubled over the past 5 years, the number of earthquakes rattling Oklahoma has surged. Until 2008, the state averaged 1 to 2 quakes magnitude 3 or greater per year. In 2015, it's averaged 2 per day. And scientists say it's not just here.
They increased throughout the central U.S. in about 2009, but primarily in just a few states and a few places within states like southern Colorado, Arkansas, Texas, Oklahoma.
The U.S. Geological Survey says most of it can be linked to oil and gas production, but not fracking itself, rather the disposal of wastewater, the salty, toxic byproduct that's disposed of deep in the ground in wells far away from drinking water supplies.
And this water is re-injected. And that's been done for years and years, but that changes the fluid balance at depth in the geologic formation, and that's what has the potential for triggering earthquakes.
Oklahoma's been hit the hardest, thanks to its geological formations and the fact that billions of barrels of wastewater have been pumped down more than 4,000 wells. The oil and gas industry, the biggest business in Oklahoma, doesn't deny the possibility of a link, at least for some activity. But Kim Hatfield of the Oklahoma Independent Petroleum Association says what is lacking is specificity, being able to locate the exact wells that could actually be triggering these quakes.
That's an issue. We need to get that right. We don't want to paint everybody with the same tar brush.
It's an issue resource-strapped regulators in many states are scrambling to address. In Oklahoma, the Corporation Commission recently released an updated directive that requires proof that wells haven't been drilled into fault-riddled bedrock.
The onus is now on the operators to prove that they're not below the Arbuckle and too deep, and they have until April 18th to prove that.
And what happens if they are too deep?
Then they have to do what's called a plug back, and that's basically making the hole shallower, bringing it back into the formation in question, which would be the Arbuckle. The cost can be $100,000 or more.
The OCC is also reviewing new applications more carefully.
How many are there?
We have approximately 80 that are backlogged.
Do you think that has any kind of effect on production right now in the state, the fact that these wells are still on hold?
It probably does.
And that's one of the many questions remaining, what this means for oil and gas production, which is still the biggest industry and provider of jobs in this state. Meantime, some residents have filed lawsuits against energy companies for personal damages, including one here in Prague following that 2011 earthquake. It's a highly contested claim and one that could, when it goes before the state Supreme Court this year, also have a big impact on this entire debate. For Nightly Business Report, I'm Morgan Brennan in Prague, Oklahoma.
And still ahead tonight, a handful of companies making their Wall Street debut today. But there are 3 things investors need to know before buying an IPO. Congressional leaders unveiling a bipartisan trade bill that could have big economic implications. The deal reached today gives the president fast-track authority to negotiate the ambitious trade pact with 11 other Pacific nations. PIMCO's flagship total return fund is outpacing most of its rivals nearly 6 months after Bill Gross's surprise departure from the firm. According to Morningstar, the world's biggest bond mutual fund returned about 3.7% from the start of October. That's ahead of 92% of its peers and its benchmark. And tomorrow on Nightly Business Report, we'll speak with Scott Mather, the man who runs PIMCO's Total Return Fund. Well, it looks like the IPO market has been jolted back to life. After a slow start to the year, last night we told you that was all about to change, and it did. Shares of Etsy, which is the online marketplace for handmade goods, surged in its debut, more than doubling at one point. And in an interview, the CEO said the company is focused on growing globally.
It's important to understand that 30% of the sales on Etsy are international. We're really focused today on a key set of countries, and our strategy is really to build local marketplaces globally. The countries we're focused on have balanced buyer and seller ecosystems. So Canada, UK, Australia, Western Europe. We're really focused on those countries.
Etsy closed up 87% to $30 a share. Party City, the discount supply store, certainly took the party to Wall Street today. Investors embraced the shares, and the CEO said that what makes that retailer attractive is its unique structure.
We really aren't a traditional retailer. We have three legs to the stool. We have a manufacturing operation, a wholesale operation, and a retail operation. And that's a rather unique paradigm because for our manufacturing operation, its largest customer is our wholesale operation. However, it's not its only customer. For our wholesale operation, our retail business is its largest customer, but certainly not its only customer.
Shares rose nearly 22% to $20.70 a share. And one of the biggest high-speed trading firms, Virtu Financial, saw its shares jump after postponing its IPO a year ago following the release of Michael Lewis's book, Flash Boys. Investors brushed off any concerns over high-frequency trading, however, sending the shares higher by 16%. So now that the IPO market is heating up a bit, many investors once again are itching to get in on the action. But our guest tonight says that there are three things to consider first. Joining us is Kathleen Smith, principal at Renaissance Capital, a manager of IPO-focused exchange-traded funds. Good to see you, Kathleen. Welcome.
Thank you.
So let's start, first of all, with your thumbnail sketch of the IPO market so far this year. Last year it was so hot, but it seems like it's heating up a little bit more.
Well, it is heating up, and I guess investors don't have to wait for Uber and Airbnb to get some excitement in the IPO market. We certainly had it today. And after starting out the year on a slow foot, those investors that have owned a basket of IPOs that are already trading, we have an index, the Renaissance IPO Index, those investors are up 10% so far this year. So that means that they're feeling pretty good about what's coming up in the IPO market. So we saw some very good results today. Etsy, just incredible. I think it did help to have a very loyal set of a community that was involved in purchasing shares on the IPO. Virtu, as you mentioned, will pay a big dividend. It'll be over 5%. And Party City, I think investors were impressed by the expected growth there.
So let's talk a little bit about if you're the average retail investor out there with a longer-term time horizon and you want to get in on these IPOs, you've given us 3 bullet points that you think are important before you take that leap. First of all, you take a look at revenue and earnings, correct?
Certainly, and I think now we're talking about an individual stock. So here we're at, you have to be very careful. And I would say the first thing is, be careful about story stocks. Look at the company, make sure it has revenues, and if no earnings, at least some clear path to earnings. So we would start out by saying avoid story stocks. Look for the earnings.
And how much of your portfolio you put into an IPO can be critical, correct?
Yes, we'd highlight the fact that you should not bet the ranch on any individual stock. Certainly you should have a diverse portfolio of stocks if you're going to choose to go one by one.
The last point, I think, is one that probably will be hardest for most investors because some of these IPOs are so talked up and talked about. And for instance, let's take Etsy. It has a very loyal following. So you say don't get caught up in the hype. But it would seem to me that would be extremely hard to do.
That's really the challenge for investors, to take one big deep breath and take a look at it without all of the media attention and the first day of trading, especially on one that has risen so much as Etsy. Give it time, because Etsy is going to have to show, particularly this company, through quarterly results, that it can continue its strong path of growth.
So you would not necessarily recommend that an investor, if they could get in on the first day, do so?
Unless we would not on a stock that has such a big jump. We would be looking at taking a step back and waiting for it to trade a little bit. The ones that have traded more reasonably, maybe a 13% or so increase, you might take a look at that, and if you felt it was appropriately valued. It really, there's no formula. If there were, we know we would all be following it.
Right. Kathleen, thank you. Always a pleasure. Kathleen Smith with Renaissance Capital. Microsoft and Yahoo are teaming up on search, and that is where we begin tonight's market focus. The companies are redoing their search partnership with some big changes. The new agreement allows more flexibility in how the results are presented and how ads are managed. Shares of Microsoft fell a fraction to 42.16. Yahoo rose a nickel to 45.78. BlackRock saw its earnings rise as the investment firm said cash flows were strong across all asset classes during the quarter. Revenue did fall short of estimates, though, because of weaker fees tied to the stronger dollar. Shares were off about 1% to $372.18. Philip Morris posting a beat on both the top and the bottom line, sending the stock to multi-year highs. The seller of Marlboro and other cigarette brands did see its profits fall from last year as it was pressured by that stronger dollar. Still, the stock popped almost 9% to $84.96. Mattel's loss widened in the first quarter as the toy maker recorded higher costs. A stronger dollar also weighed on its sales. The company has been trying to revamp as sales for some of its toys, like the iconic Barbie doll, have slowed. Shares were volatile in after-hours trading. The stock was off slightly to $25.27 during the regular session. On the economic front, the number of Americans filing applications for unemployment benefits rose slightly last week, but remained below a seasonally adjusted 300,000. But we got a sluggish read on the housing market as groundbreakings on new homes, known as housing starts, rose far less than expected in March, up just 2% from a month earlier. But one region where the housing market is red hot and getting hotter is San Francisco. And today, a new report shows the median price of a home in that city topped $1 million. Josh Lipton has more.
If you want to buy a home in the San Francisco Bay Area, you better move fast and have cash in hand. The median sales price in the San Francisco metropolitan area, which includes San Francisco, San Mateo, and Marin counties, has topped $1 million for the first time, a nearly 20% jump year over year. That's according to a new report from Redfin, a real estate brokerage.
You know, we've been dealing with this market since the beginning of 2012 and seeing this rise year over year over year. For someone that's in the business all day, every day, I'm not terribly shocked. But just to say $1 million median home price in the San Francisco metro area is a little bit shocking to say.
The seller of this $1 million house actually bought another home before putting this one up for sale. How come? Because the market is now so competitive that she was afraid she wouldn't be able to find a new place to live. In March, nearly 50% of homes sold in 14 days or less, and buyers were willing to pay up for their dream homes. More than 70% sold above the listing price. That's in part due to the lack of inventory, with the number of new listings down 12% year over year. And real estate agents attribute the sky-high prices to demand from a thriving tech industry. Unless there's an increase in inventory, real estate experts don't see this trend changing. If anything, it's spreading, with nearby San Jose, California, nearing the $1 million mark as well. For Nightly Business Report, I'm Josh Lipton in San Francisco.
Still ahead, the big money behind the movie that revolutionized Hollywood decades ago and remains a multi-billion-dollar empire today. And here's what to watch tomorrow. General Electric, one of the most widely held stocks, will report its quarterly earnings. We'll have the Consumer Price Index report, an important inflation indicator, and also the latest read on consumer sentiment. And that's what's on the agenda for Friday. Ben Bernanke is taking on a new role. As first reported by the New York Times, the former Federal Reserve Chair will advise the $25 billion hedge fund, Citadel. Bernanke will offer advice on global economic and financial issues and meet with the fund's investors. And finally tonight, the Force is with the thousands of fans descending on Anaheim, California for the Star Wars Celebration Convention. The movie franchise is one of the most lucrative in Hollywood history. And as Julia Borston tells us, decades after the first film was released, there's still big money behind the famous series.
Star Wars Celebration drawing 40,000 fans for panels, autographs, exclusive merchandise, even a Jedi training session.
Who wants to see a new teaser?
The main attraction, the future of the franchise. Director J.J. Abrams unveiling a new teaser for The Force Awakens, which hits theaters December 18th.
We're home. I've never had more fun in my life working on anything, and the opportunity far outweighs the risk of this, and I can't wait for you to see the movie.
And fans were excited by what they saw.
It was loud. Everyone was super excited, cheering, standing, yelling, all of it. It was really awesome.
Just complete craziness, mayhem. Yeah, it's just crazy how many people are here.
You want to see more and more, and then they end it showing Han and Chewie together.
The movie-going audience in the world is much larger than it ever was. There are markets today that were non-existent before in terms of movie-going, China being a great example of that. So we're fairly confident that this film is going to do quite well, but way too soon to make predictions, and probably we will not make any in public.
Disney's been working hard to reassure die-hard fans like the ones here that the nearly 40-year-old franchise is in good hands under its new ownership. Based on the reaction so far, Disney CEO Bob Iger says he's confident that the $4 billion acquisition of Lucasfilm will pay off.
I think in the end, the shareholders of the Walt Disney Company, including George Lucas, will be quite happy about the investment that was made.
With devoted fans like the ones here, Disney's working to build a Star Wars presence in its parks to grow consumer products revenue, and there's potential to expand the Star Wars universe to TV. For Nightly Business Report, I'm Julia Borston in Anaheim, California.
And that is Nightly Business Report. I'm Sue Herrera. Thanks for joining us. We'll see you tomorrow.